Hi everyone, Bowen from Enhanced Asset Management here, just back with an update today on your direct share position in ResMed. So it's August 1st, the reporting season has kicked off, and ResMed was the first stock to report for us. So ResMed reported a 10% increase in revenue for the full year, up to $5.15 billion. And this was paired with a 230 basis point expansion in the gross margin, up to 60%. We saw SG&A and R&D expenses grow at just 8%, which then resulted in a net income of $1.4 billion, which was 23% higher than FY24. Management continued to buy back shares using their surplus cash, and that's why we saw a little higher increase in the earnings per share, up 24% to $9.55. So it's a really strong result for ResMed. Revenue's growing in line with what we're expecting, and we're seeing that operating leverage continue to come through the business to grow profits at a much higher rate. And guidance for FY26 is also extremely positive. Management have stated for a gross profit margin of between 61 and 63%, so there's still plenty of margin expansion to come. And keeping SG&A and R&D expenses at a similar percentage of revenue, we end up with a net income figure of just over $1.6 billion for FY26, which compared to where we are today is about a 14 or 15% growth. So the thesis of high single-digit, low double-digit revenue top-line growth, converting to much higher earnings growth, remains completely intact for FY26, and we're really comfortable with how the company is looking. And I also thought we'd just bring up the balance sheet because it really paints a picture of how cash flow positive ResMed has been over the last few years. And now, for the first time since I've been covering the stock, they're actually in a net cash position. So they have $1.2 billion of cash on the balance sheet with just $658 million of debt. So they now have a cash surplus of just over $550 million, which they're going to start earning income on, which will start flowing through the cash flow statement and the income statement straight down to the bottom line, which continues to help grow that operating leverage. They also maintain a serious amount of flexibility to look at acquiring some competitors or some little bolt-on acquisitions, or they might increase their R&D themselves or pay out dividends, whatever it's going to be. They're in an extremely strong financial position to do it. And I spoke about earlier just that net income figure, so we get it to just over 1.6 billion for next year, and maintaining our cash flow forecasts, we end up with a per share valuation of just over $49, which compared to the prior close, I think it's up a couple of percent today, but there's still a 15% upside there. So the valuation keeps climbing as the performance of the business keeps improving. We're pretty comfortable maintaining our position in ResMed. It is the largest position within the MDA and the Australian high conviction portfolio, and we're not looking to change that off the back of this result. So as you can see on the chart here, the share price has performed extremely well throughout July, off the back of some pretty positive earnings updates, and today's no exception. So we're up over basically at 43.50 this morning at the time of recording, and the share price is following the earnings perfectly. The business has a lot of tailwinds behind it, extremely cash flow positive, and they're building that cash liquidity on the balance sheet. We're expecting another strong year in FY26. And as I said, we're really comfortable retaining this one as the biggest position across both portfolios. As always, this is general information only. If you do require any further financial advice, please speak out to your licensed advisor. It's going to be a busy August for us. We'll keep in touch with updates as they come, and we'll also keep you involved with any portfolio changes if and when they happen throughout August. Thanks for tuning in, guys. Hope you're all well. We'll talk to you soon. Cheers.